Welcome to the Your Home Sold Guaranteed radio show, where you get advice you can trust. From home selling tips to investing, this is the talk show that will help you make the most money when selling your most valuable asset and save the most money when buying. Now here are your hosts, Dave McKay, along with Wally Kerr, broker and founder of Your Home Sold Guaranteed Realty in Oklahoma City.
This is the Your Home Sold Guaranteed radio show. I'm your host, Dave McKay. Wally and Cindy Kerr are out this weekend. They'll be rejoining us next weekend. We are going to be rerunning three popular segments from August, and they are three segments on how to purchase your very first home. So if you're looking to buy your first home, maybe know a loved one or a friend, a coworker that's looking to buy their very first home, this will be a very informative show to tune into and listen to. And don't forget, if you miss us on Saturdays at 11 a.m., join us at noon on Sundays, or of course on all the major podcast apps, or you can go to wallytalkshouses.com. Find every show all divided up by topics into easy to digest segments. So sit back, relax. How to purchase your very first home. Coming up next in 2 minutes on KOKC.
Looking for a cash offer for your home? If so, do you want to see just one offer, or would you prefer to receive multiple cash offers and you get to choose the one you want? IWantMultipleOffers.com is the place to go. And that's exactly what you'll get fast. You choose the closing date, no open houses, no strangers in your home, and no waiting to receive an offer. You can sell as is. Today we know that homeowners like you want options. Our cash offer program, where you receive multiple offers, not just one, allows you to do what you want to do. If the cash offers aren't quite as high as you want, you still have the option of placing your home for sale for only as long as you want. 1 week, 2 weeks, a month, you choose. And if it's not sold in that agreed period, you can take any one of the cash offers, including one from us. Visit IWantMultipleOffers.com. Get the options you want, or just give us a call today. Wally and Cindy Kerr at Your Home Sold Guaranteed Realty at 330-3000.
Best Protect Roofing and Construction has been serving the Oklahoma community since 2017 with trusted professionals and a proven track record. Best Protect Roofing and Construction has the local knowledge to ensure every roofing project is compliant and hassle-free. They offer free roof inspections to assess damage, provide accurate quotes, and recommend the best solution for your home. Call today, 405-473-9599. Best Protect Roofing and Construction.
Finding the right mortgage can be stressful, from knowing which program fits your situation the best to identifying the best terms. Hi, I'm Chris Stoke with Gateway Mortgage. I work closely with you every step of the way, from pre-qualification to helping you choose the home loan that's right for you. My promise is to provide transparency, timely communication, personal service, and closings on time. Call me today at 405-253-2276. That's 405-253-2276.
NMLS 984758. Gateway Mortgage, a division of Gateway First Bank. NMLS 7233, Equal Housing Lender.
If you or a family member will be selling or buying a home and would like to schedule an appointment with Wally, call 405-330-3000 or go to wallysguarantee.com. Now back to the Your Home Sold Guaranteed radio show with Wally Kerr.
Wally, we've been doing the show now together for about 6 months. This is the first time we've done a series on the steps for a future home buyer to take in preparation for purchasing a home. And I know it's going to be more than just go get pre-approved, find the right realtor to work with, and move on down the road. But let's get it started right off the bat. If someone is thinking about buying a home, they want to buy a home, they're a first-time home buyer, what are the first steps to take?
You know, I'm going to start by reminding our listeners again that all of our radio shows are available for download at wallytalkshouses.com. So we've got this session today.
Yes.
It'll be a little more extended, so stick with us and we'll give great information on how to buy a first home. This will be so that you can download the shows or have your kids or grandkids download the shows. We want to be here for good advice. And, you know, it's a lot of steps. And for a first-time buyer, part of it is educating them, Dave. So
Yes.
We want to get them on their way to making their first home purchase. And so for a teaser, I'm going to tell a quick story that I think will surprise the majority of our listeners today because it involved a first home for a college attendee. And this was a high-profile OU coach. And when his wife called me and said, we'd like to buy a home for our daughter while she attends OU, we started talking about it. And I said, hey, there's this great FHA program called a kiddie condo. And that's what's in the name, so people get confused and think it has to be a condo.
Okay.
But it's called a kiddie condo program. And I said, hey, as long as she's got good credit, you can buy a home with 3.5% down payment. And I got a blank stare from the coach's wife. And she said, well, now, wait a minute, Wally, that doesn't sound right. She said, all my friends have said I'm going to have to put 20 or 25% down. She said, are you sure about that? And I said, absolutely. I said, how many hours is she enrolled in school? Well, she's got 15. And I said, good. If she's got a credit score, she doesn't have to have any income. She doesn't have to have a job. She doesn't have to have any job history.
Okay.
The only thing she's got to have is a good enough credit score.
She's buying the home, and are the parents kind of co-signing on it?
Well, there's no
Or
real
how is
thing.
this?
There's no such thing really as a co-sign in real estate, Dave.
Okay.
That's going to be something maybe our listeners don't know. Is there's a thing called co-borrow, which means the parents would go on with the kiddo, but the parents are still just as liable for the repayment as the kiddo is. So let's keep it simple. A minimum 3.5% down payment on an FHA kiddie condo, and you get a slightly better interest rate. The family doesn't need as many assets for collateral to satisfy the terms of obtaining a loan. And again, the hitch here is, even though the student, must be at least 12 hours of school, again, no income, but they've got to have a good enough credit score. And you could buy with a very low down payment, help your 18, 19, 20-year-old buy a home, and then they bought their first home very young in life. When they move, they could keep that as a rental property or sell it, and the value's gone up, and it's a lot more affordable than just going and living in the dorms.
This is great because I didn't know about this. You are speaking directly to me and Kim because our son is going to be interested in continuing education, possibly down in Norman after he graduates from college. And we thought about if we purchase a small home for him, or now I see that he can do it himself and we can help. And now he's going to raise his credit score. He's going to have a home with his own equity. Again, creating generational wealth.
That's exactly
I love
it.
that
Yes.
phrase.
Yep. We love helping people do that.
And now this is something that we can really think about in a couple of years. So this is exciting.
So these are some of the options we're going to talk about in this series. And we're going to start today talking about credit scores and getting it where it needs to be.
Everything starts with credit scores.
It
Qualifying
does.
for a loan, home, car insurance, everything.
Right. And because you get a better interest rate when you have a better credit score, it's worth spending some time with our favorite preferred lender, Chris Doak with Gateway Mortgage, to talk about how to get a credit score to the required minimums to be able to purchase, as well as how to improve a credit score enough to get an even better interest rate when you apply for and obtain a mortgage.
Well, Wally, with all that being said, let's go ahead and bring on Chris Doak from Gateway Mortgage. Chris, how you doing this morning?
I'm great, Dave. How are you?
We're doing fantastic. We've been talking about first-time home buyers, what you need to get your affairs in order, if you will. One of the big things was credit scores. Tell us, with your experience and your expertise, what are a couple of the most necessary items possibly that a first-time home buyer is going to need to have in order to start the process?
Yeah, great question, Dave. It's funny. My 16-year-old literally asked me this question the other day about getting her credit score going. And she wanted to start today, and I told her we're going to start soon, but we don't have to today. But I would just say it is as simple as having them obtain a credit card and putting a tank of gas on it once a month and paying it off every month. That's where I will start with my kids. It's the thing that produces the best history and the best scoring mechanism that I've seen, mainly because, Dave, what they want to do is they want to see that your usage is at 20 or 30% of what the limit is. So if the card is, you have a $1,000 limit on it and they're putting $50 a month and paying that off, that score is going to build rapidly, and it's going to be a very good score because the usage is very low on it.
And I think it's important, Chris, I think you and I know this. Don't go do it at a store where you're going to charge, groceries and lots of things on the card. You just want to keep it simple and almost choose one gas station that only sells gas. So that all you do is charge $50 on it. Chris, if someone does that and begins to pay that every month, how long would it take to establish a good credit score if someone doesn't have a credit score now?
If there's no history, again, not a credit expert, but definitely the credit experts that I've spoken to, I think they say usually, Wally, it's about 6 months before they'll really develop a good score. Yep.
Boy, that's quick.
Well, and, but what I think, Dave, is we're talking about getting first-time buyers prepared to buy their first home.
Yes.
Maybe it's going to be next spring. Chris and I both believe, with what he's told me, is that interest rates probably by the end of this year, and then definitely into next spring, should be lower. And so for our listeners and for their kids and grandkids, what a great time to begin establishing that credit score and getting ready for maybe making a purchase next spring or summer. Right, Chris?
I think what people need to know, Wally, too, is when people come to me a lot of times, they're like, hey, my credit's 760. And what they need to know is that that's probably with Credit Karma or someone like that, and that formula is vastly different than the mortgage industry formula, which is why the scores can differ.
Okay, good. So we've established this, get a credit score, go charge 1 tank of gas a month, and then pay it, and establish that credit score. So we've got that credit score in line, and maybe that takes 4 to 6 months. And so let's relate that now to, I've got a credit score, and if I'm not going to go do this FHA Kitty condo program and co-borrow to buy a home with my parents, which is an awesome program, take just a minute and elaborate a little bit about that program, because I didn't tell our listeners everything about it. And one of the questions I had for you this week, as we talked about doing this segment, was help us understand a little bit about that credit score for the youth who would be a part of this purchase.
What's interesting is a lot of times people will call me and say, hey, I want to buy a house for my kid who's coming to college. I know I need to put 20% down and do it as an investment property, and it's going to be higher rate. And the first question I asked them was, well, does your child have a credit score? And they're like, well, yeah. I mean, we've got them a card, and their credit score is 700. And I said, well, great. Well, if this is going to be their primary residence for 12 months, then we could have the loan in their name as long as they have a credit score, and then we can have you guys be non-occupant co-signers and run it through the system, and it's probably going to take it, and you're probably going to get the primary residence terms, which means you only have to put down 3% on a conventional, and you get primary residence rate.
Chris, for that home to be in their name, let's talk about employment a little bit. Now, over the years, I've worked with a lot of families where, and really a lot of buyers, where the first-time buyer has graduated from college and they immediately take a job. In that case, they don't have to have 2 years of employment history, correct?
That's correct. Their college transcripts or college classes, depending on loan program, can absolutely offset the need for 2-year work history.
Okay. But what about COVID, Chris? How is it looked at for, let's say that we have a listener here, and let's say that they've got someone who graduated college, it's a child or a grandchild, and they graduated, let's say, in 2018 and worked in the workplace for a couple of years, and then here came COVID. And the company either closed or it shrank in size, and they were laid off for, let's say it's 6 months or a year. And then they went and got a job in the same industry again, or the company reopened and they started working again. What kind of relief is there because of COVID and what came along? Are there programs available that recognize what happened, and would that allow that young person to be able to go back and qualify for a loan, knowing that there might be some interruption in work history?
The major loan programs absolutely have some guidelines in there that allow for some leeway on a COVID experience that potentially put them out of work. You know, we're at a point now where as long as they've been back on the job for 6 months or a year in some instances, which most will have been because, middle of 2023, then that typically they're going to be able to explain that and it's going to be okay. And they've proven that they're back on consistent, stable work.
Would they have to be in the same line of work to qualify?
So in general, no, but there are a couple loan programs that are a little bit more stringent on that, like VA. But if they've been on 6 months to a year, it shouldn't be an issue.
Let's go through just a real quick recap here. Someone wants to help a young person buy a home. They can get in with a minimum 3.5% down payment. They don't have to be fully enrolled in school. They're going to have a decent credit score, but they can buy the home in their name with 3.5% down with the parents co-signing.
I'm learning so much here. It's kind of like I'm drinking from a fire hose.
Yeah.
This is a lot of new information, a lot of great information for first-time home buyers. Wally, give the website address again, because I know that people are going to want to go back and listen to this show again. But what is the website they can go to listen to our
WallyTalksHouses.com. We premiere each show, so we are live here on Saturday mornings. We replace Sundays at noon. So if you've got, again, kids or grandkids, or you want to hear it again tomorrow, you can do that. And then each Wednesday, we go and drop the shows into Wally Talks Houses, so you won't have access to this show to download it until Wednesday of this coming week. Dave, I think the reason you're so excited about this, and forgive me if I'm wrong, is you're engaged because you've got a son that age.
Yes.
You're looking at this as being an opportunity of, am I going to get stuck paying rent while he goes to college, while he perhaps works on his master's degree or his law degree? He's going to be stuck, and I'm going to be paying all this rent, and it's going to go down the tube, and I'm not going to get any equity. You've reversed your thinking here, and it's exciting to think that you can buy a home with 3.5% down. And as you said, we can create some generational wealth for your son.
Yes.
And he'll be a homeowner at age 20 or 21 or 22. And Chris, for over the years, when I've explained this program to many parents, again, I told Dave earlier, they kind of look at me funny, like I'm out of sorts or don't know what I'm talking about.
Sure.
How many parents have you told this about over the years who are really surprised that programs like this are available?
Probably once a month at least, especially with you in our backyard. We get a lot of calls for this type of situation.
Chris, great to have you on. Thanks for all your great service to our team.
Hey, absolutely. Thanks, guys.
To schedule an appointment with Wally Kerr to help you or a family member buy or sell a home, call or text at 405-330-3000 or go to wallysguarantee.com. Wally will be right back with more of the Your Home Sold Guaranteed radio show right here on KOKC.
Finding the right mortgage can be stressful, from knowing which program fits your situation the best to identifying the best terms. Hi, I'm Chris Stoke with Gateway Mortgage. I work closely with you every step of the way, from pre-qualification to helping you choose the home loan that's right for you. My promise is to provide transparency, timely communication, personal service, and closings on time. Call me today at 405-253-2276. That's 405-253-2276.
NMLS 984758, Gateway Mortgage, a division of Gateway First Bank. NMLS 7233, Equal Housing Lender.
Best Protect Roofing and Construction has been serving the Oklahoma community since 2017 with trusted professionals and a proven track record. Best Protect Roofing and Construction has the local knowledge to ensure every roofing project is compliant and hassle-free. They offer free roof inspections to assess damage, provide accurate quotes, and recommend the best solution for your home. Call today, 405-473-9599. Best Protect Roofing and Construction.
Hey, home buyers, let's talk turkey for a minute. Would you choose a healthy economy or lower interest rates? As of January 5th, the U.S. jobs report says we're in a healthy economy with a larger increase in jobs in the U.S. That leads us to believe the Fed will wait even longer until it begins to reduce its rate. Meantime, the demand for homes always picks up in the spring, with many buyers chasing the same home, and that means more competition for you. With home prices on the rise, doesn't it make sense to get in the market now? A $300,000 home that increases just 2% over the next year will increase $6,000 in value. I'm Wally Kerr, and my team and I offer rock-solid advice about buying a home in a market like this one, where home prices are going up and fewer homes are for sale. Call Kerr Team today at 330-3000 and tell us you're ready to get started with the process. I promise you'll have a great experience working with my team. Call us today at 330-3000.
If you or a family member will be selling or buying a home and would like to schedule an appointment with Wally, call 405-330-3000 or go to wallysguarantee.com. Now back to the Your Home Sold Guaranteed radio show with Wally Kerr.
I learned several things I didn't know about helping a young adult buy a home affordably. It's exciting to me because I know in this housing market, it's going to fire back up, and I'd like to help my son get into his first home sooner rather than later.
Right.
You know, this is exciting.
Well, with home values still appreciating and expected to increase, a little more moderate than what it's been in the past, but the numbers I'm seeing are still 2.5%, 3% per year on appreciation.
Yes.
Means the value is going up, not down, right?
I dig it.
So, so it's important that we share, the best ways to get this accomplished and help our listeners and their kids and their grandkids. So today's part 2 in our 3-week series on how to prepare to purchase your first home is going to focus a little bit on debt to income ratios.
Okay.
And how to get that in order. We just touched barely on that last week. Down payment requirements and then available down payment assistance, and perhaps even getting help from a relative, what we call gift funds. And we'll talk about that today.
Well, now let's connect with Chris Doak from Gateway Mortgage. Chris, how you doing this morning?
Dave, I'm doing great. Thanks for having me.
Always good to hear from you. Glad to have you on the show this morning.
Hey, Wally. Wally.
Well, let's jump right in and discuss our topics of the week, starting with required credit scores. I do have a couple of questions. Is there an absolute required minimum for credit scores when purchasing a home? And do interest rates get better for a home loan with a higher credit score? And where are the break points?
There are, Dave, to answer your question, and it does vary from program to program. There are minimum thresholds for each program. But then the other thing I want to convey is that on top of the minimum thresholds that each program has, lenders then have their risk tolerance on each program and have a credit score minimum that could be greater than that. Okay, so let me give you an example.
Okay.
What a lot of people don't know is that on an FHA loan, you can go all the way down to 500 on your credit score.
Oh, my gosh.
Wow.
So how in the world, thinking that 620 to 640 is the credit score that needs to be achieved,
Right.
does someone have to have $50,000 in the bank to go qualify for an FHA on a 500 credit score?
It does vary from loan to loan, meaning you run it through the system, Wally, and the system is going to pick up on compensating factors, like meaning more in the bank, debt-to-income ratio is low, different factors. And I will say a large down payment in that situation where the score is low sometimes does bear fruit and it gives an approval in that circumstance. But it's definitely looking at the other factors and seeing if there's some things that are in favor, even though the credit score may be low.
So do interest rates get better for a home loan if you have a higher credit score?
They do. Yeah, the higher the credit score. And there were some changes that Fannie Mae made earlier in the year, and there was a lot of people up in roar about it. And it did become kind of a political situation. But at the end of the day, the better credit score you have, the better rate you're going to get and you're going to pay less for, okay? And the worse credit score you have, the higher the rate is.
Let's just say for a moment that someone only has, say, a minimum down payment. They're going to do an FHA program because that typically allows one of the lowest down payment programs available for buyers. And we're going to talk about that some today, I know. But let's say that someone's sitting at that they need a 620 to qualify, and they're sitting right now at a 570 or a 580. Now, what is your company's policy? How do you help these home buyers who are sitting a little lower than where their credit score needs to be? What kind of coaching do you give them, or do they just have to go do all this and figure out how to do it on their own?
Wally, we absolutely, number one, want to help them when we can in instances like that to help them get their score up. What I will say is we aren't credit experts, okay? So even though we look at credit quite a bit, there are credit experts out there that can help people, especially when it's a lot lower, if they need to cover a lot of ground, if they need to increase it by 100 or 200 points. There are credit experts out there that would want the borrower to potentially, we'd want them, if they feel like they want to, work with them on getting that score up. But if it is a smaller amount of ground that needs to be covered, our system does create some situations where you can see where it helps people get their scores up and gets them into a place that would potentially get them a loan, and we would absolutely want to give them that feedback.
Chris, let's say someone is listening today and they've got a 450 credit score, and they say, yeah, I don't want to rent forever. I'd really like to get into being able to purchase a home so that they aren't ripped off, so that they don't go to a service that doesn't provide a great service for the price. Do you have a place that you would tell listeners to consider going first to get that credit score up?
There are definitely people that we've worked with out there that I would trust more than not to handle my own credit score repair. Absolutely. At the end of the day, it's their choice, and they definitely will have the opportunity to make that choice. But there are definitely people we've come across that we have seen take care of people well.
Let's get down to the nitty and gritty of it for a moment. Let's say somebody's got a good credit score, but they just happen to make a late payment on a car or a credit card, and that ends up being in the last 30 days. Chris, how much does that affect credit score, and how much does that hurt a borrower's ability to go in and qualify?
Wally, those are the unfortunate situations, and I've had multiple friends who have 800 credit come to me, and they've had a $50 medical bill that they didn't even realize was out there come late in the last 30 days, and it's taken their credit from 800 to 640 all of a sudden.
Oh, my.
And they're ready to buy the $500,000 house, and their credit's been impeccable.
I could drive a model Hot Wheels car right into Dave's mouth right now because it dropped so quickly when you said from 800 to 640. So
it's unreal.
So if you're trying to buy a home and you're trying to buy your first home or you're trying to buy your third home, a killer, I've heard you before over the years, Chris, say, well, unfortunately, this borrower's got a 30-day late and two 60 days late on their credit report, and Wally, I can't fix that because those are so recent. Those are really damaging to credit reports, is what you're telling us.
They are, but can I give you one good piece of good news? They came out with legislation in just the last year or so on medical. What they realized is the medical industry was just terrible at just starting to throw stuff into collection, okay? And so they actually have come back and said, and I don't have the bill in front of me, but there is legislation that has been passed, and this is accurate to the best of my knowledge, of where I think if the medical bill is less than $500 and you pay that off, that it will be deleted from your report, and you can have it deleted immediately and your score rescored immediately and get that score back up.
Chris, just real quickly, and let's get this one fast and just give a brief description for our first-time listeners. What is debt-to-income ratio? And I often, as a real estate broker, get asked, and somebody will say, this is how much my income is, but how much do I have to take off for the taxes that come out of my check? So let's, Cliff Notes version, if you will, what is a debt-to-income ratio?
Yeah, the debt-to-income ratio is the debt that you've incurred, the monthly payment for that, divided by the income that we are able to utilize for the loan you're trying to obtain. Now, what that means, Wally, is what is the income? How do you calculate the income? And that's a broad question depending on the loan program and the income type. So let's just take a W-2 income earner, okay? I work for Gateway. I receive a W-2. And if I were a salaried W-2 employee, I would want the gross before tax amount that I'm paid, and that's the income that I would utilize in that calculation.
Another way that could really benefit a first-time home buyer, what about like gift funds for your down payment from family members? How do they acquire those, and how does that come into the mix?
Bottom line you need to know is that if you have the ability to get a gift, there's certain assets that you can utilize for the down payment and closing costs of a loan. Some that you can't utilize. For instance, most instances you can't utilize cash under your mattress, okay? But you can utilize a gift from a verifiable source that each program allows. So, like, for instance, FHA allows, it's literally, they list out like 30 different relatives that can gift you money. And, like, I think a cousin can't, but a grandfather can. I mean, it's super bizarre. But there are a lot of relatives can provide gift funds that would allow you to get into the house and pay for closing costs. They also allow employers to gift in certain circumstances.
Oh, wow. Really?
Which is interesting.
I've had a lot of young buyers, gentlemen, over the years where they said, my grandmother would like me to buy a home, and she's offered to give me some money as part of my inheritance up front so that I could buy a home because she feels like I'm spending the money for the right purpose, and that can be done. Right, Chris? So if it's a blood relative like grandma, grandpa, mom, dad, sister, brother, parent, they can gift money.
And with certain loan programs, FHA, for instance, they allow close friends. That's literally what I think the guideline says, or close interested friends. And the funny part is how do you actually identify if they're a close friend or not? There's ways to do it. This is funny. How about Facebook posts from 3 years ago showing them in a post together?
You've got to be kidding me.
I'm not kidding you, Wally. I'm not kidding you. So domestic partners, okay, so you don't always have to be married to receive a gift from someone. A close interested party can be someone who can gift as well.
That's amazing. So lots of options for down payments. There's ways to fix credit. You don't have to absolutely have a 620 or a 640 credit score to buy. What about other programs now, Chris? Because I'm in real estate, I know what a Native American loan is, and I know what a U.S. rural development loan is. And, of course, military persons, past or present, can buy with zero money down. And we see so many military people do that here locally because of Tinker Air Force Base. Can you just touch real quick on what a Native American loan is?
Yeah, great question. I love these loan programs. Native American loan is a great loan that FHA backs, and it's the lowest down payment, which is 2.25% rather than 3.5%, which is on a normal FHA. And if someone's enrolled in a particular tribe, there's a list of tribes that you need to be enrolled with to obtain this loan. They could absolutely do so. And it's a great loan, lower mortgage insurance, a little bit lower funding fee as well. So great loan to utilize.
It's amazing how many people are carrying a Native American card that allow them to do this, and we help scores of people with that program. And then finally, the rural development program, if somebody wants to live kind of outside the metro in some of the lesser populated areas, I believe there's a 100% program that doesn't require a down payment called an USRDA loan. Is that correct?
That's right. They are great loans known as the RD loan or the USDA loan, and 100% financing, really good loans. You do have to make under a certain amount. And even before that, the property has to be located in an area that is eligible for this. But there's a lot of areas around the Oklahoma City metro, kind of right out on the outskirts of that are eligible for properties in those areas.
So our goal today was to talk about debt-to-income ratios, which we talked about, and how to get that score up. And again, Chris has talked today about how to work on credit repair to get the credit score up, right, yes. Dave? Then we've talked about down payment requirements and then some available down payment assistance. I guess that's the last one we didn't really touch on today, Chris, that was on my list. And you've recently been running a program that we've talked about for several shows that would include Gateway Mortgage in a program that would help a buyer pay their down payment and perhaps some closing costs. Could you touch quickly on that?
Yeah, great program through REI. Two big down payment assistance programs in the state, REI and OHFA. REI allows a 5% gift, and I shouldn't say gift. It's actually a 5% second mortgage, very small amount that you pay out monthly, and that 5% goes towards your down payment and your closing costs, whereas OHFA's down payment assistance you have to pay back when you sell the house. So I love the program. It gives you a bigger chunk and really helps you get in the house with a lot less money down.
Great. So we've talked about down payments and now down payment assistance and even getting funds from your friend, your Facebook friend, your family member, whoever it is. It sounds like there's a whole lot of options there. Chris, that's a lot of information today. And next week, we're going to kind of wrap this whole thing up on how do I purchase my first home and what should I be ready for. And we've got a list of things like a timetable for purchasing, how long it takes to close on a home once you've written a contract, when should someone start looking, how much money are they going to need, now and how much for closing, even locking an interest rate and doing home inspections and who they're going to work with. So we have a lot to tie in on week 3, which will be next weekend, but your help in explaining the loan process. Chris, you've been with Gateway Mortgage for a long time now, and you've been a loan originator for, 14, 15 years, I believe. Is that right?
Going on 16 now. Yep,
wow.
Getting up there.
We're all getting older, Chris. How do our listeners reach you if they would like to perhaps investigate or start the process this next week? What's the best way to reach you and your team?
Best way is 405-253-2276. They can give us a call, 405-253-2276, or even send us a text, and we'll get back with them ASAP.
Great information. Again, if you just missed the segment or you heard us this morning, but you missed it last week and you want to get caught up, go to wallytalkshouses.com and you can get previous shows there, especially last week, to get caught up.
To schedule an appointment with Wally Kerr to help you or a family member buy or sell a home, call or text at 405-330-3000 or go to wallysguarantee.com. Wally will be right back with more of the Your Home Sold Guaranteed radio show right here on KOKC.
Best Protect Roofing and Construction has been serving the Oklahoma community since 2017 with trusted professionals and a proven track record. Best Protect Roofing and Construction has the local knowledge to ensure every roofing project is compliant and hassle-free. They offer free roof inspections to assess damage, provide accurate quotes, and recommend the best solution for your home. Call today, 405-473-9599. Best Protect Roofing and Construction.
Finding the right mortgage can be stressful, from knowing which program fits your situation the best to identifying the best terms. Hi, I'm Chris Doak with Gateway Mortgage. I work closely with you every step of the way, from pre-qualification to helping you choose the home loan that's right for you. My promise is to provide transparency, timely communication, personal service, and closings on time. Call me today at 405-253-2276. That's 405-253-2276.
NMLS 984758, Gateway Mortgage, a division of Gateway First Bank. NMLS NMLS 7233, Equal Housing Lender.
Looking for a cash offer for your home? If so, do you want to see just one offer? Or would you prefer to receive multiple cash offers? And you get to choose the one you want. IWantMultipleOffers.com is the place to go. And that's exactly what you'll get fast. You choose the closing date, no open houses, no strangers in your home, and no waiting to receive an offer. You can sell as is. Today we know that homeowners like you want options. Our cash offer program, where you receive multiple offers, not just one, allows you to do what you want to do. If the cash offers aren't quite as high as you want, you still have the option of placing your home for sale for only as long as you want. 1 week, 2 weeks, a month, you choose. And if it's not sold in that agreed period, you can take any one of the cash offers, including one from us. Visit IWantMultipleOffers.com. Get the options you want, or just give us a call today. Wally and Cindy Kerr at your home sold guaranteed realty at 330-3000.
If you or a family member will be selling or buying a home and would like to schedule an appointment with Wally, call 405-330-3000 or go to wallysguarantee.com. Now back to the Your Home Sold Guaranteed radio show with Wally Kerr.
So Chris Stoke from Gateway Mortgage is back joining us this morning. Good morning, Chris. Thanks for joining us.
Good morning, Dave and Wally. Great to be here.
You know, we've discussed in weeks 1 and 2 how to get all of your affairs in order, if you will, how to get prepared to purchase that home. And I think really today is going to be the meat and potatoes of it, basically purchasing the home and what goes into that, especially for first-time home buyers. There's going to be maybe a few added expenses that maybe some people didn't know what really goes into closing costs and some other fees and stuff. If we could just start off maybe when someone is just about ready to purchase a home, explain maybe a little bit of their money needs, the cash flow they might need at the present moment of purchasing the house.
That's a great question, Dave. I'm going to start with the figure of zero because legitimately there are instances where someone can get into a house with no money at the table.
Okay.
Isn't that unreal?
If you were going to go buy a CD today for $50,000, how much money do you have to go buy a $50,000 CD?
I'm not super smart, but maybe 50 grand.
I think that's what it is. I might need to get my slide rule out here to check that, or my calculator. But then here you're talking about maybe I could go buy a $150,000 or $175,000 or $200,000 home, and you can actually buy an appreciating asset that's expected over at least the next year to go up 2 or 3%, and you could actually buy it with zero down. Now, to me, that's the American dream.
Yes.
You can actually get into home ownership for very little money. Guys, what even if you put 5% down on a $200,000 home? $10,000 out of pocket, and you bought something worth $200,000.
Yes.
Just doesn't happen anywhere else.
Your ROI on just 5 or 10% down after year 1 or 2, and I think 2 and 3% are incredibly conservative, but rightfully so, utilizing that. The ROI you earn just the first few years back is pretty unbelievable.
Yeah, it is. And it's those more affordable homes, and you and I know this, Chris, and Dave and I talk about it on our weekly shows. Those are actually the homes that are appreciating faster.
Yeah.
Affordability has just gone out the roof. It's just harder and harder to buy a home because the affordability has been going down and the home prices have been going up. So why not get on that roller coaster that just seems to keep chugging and pushing up the track, going higher and higher? Why not come up with just a little bit of money and find a way, even if it's gift funds, like what we talked about, getting help with your down payment to buy an asset that's worth a couple $100,000 maybe.
Sure.
That's going to increase in value 2, 3, 4, 5, 6% per year. That's exciting for me to talk about because I've helped so many young families and first-time buyers, and guys, even first-time buyers that were buying their first home in their 50s or 60s. They just have rented. Maybe they were military and never decided to buy. I had a 57-year-old last year that bought their first home. And it's still exciting, no matter what age you're at, to buy an asset that can appreciate, especially like what we've seen over the last 2 or 3 years, with a minimum down payment.
So, Chris, if they don't have to have any money, like you said, $0. Obviously, we've talked about credit score and maybe their work history and all that stuff. So that's going to change that variable, I would assume.
Yeah, let's talk. Zero is the first answer, but there's obviously not everybody can fit into that category, right? Or want to fit into that category. But what I wanted people to know is that literally there are programs out there, depending on if it's USDA 100% or VA or down payment assistance combined with seller concessions, sellers giving money for closing costs that allows someone to get in without any money. Now, if you want to just talk about a normal situation, a $200,000 house, someone wants to do a 3% down conventional loan, that's $6,000 down payment. And let's just say closing costs are in the $9,000 range. That's a $15,000 investment if they don't do any of those other things. If they just want to do a normal 3% conventional or an FHA even, 3.5% down.
So, Chris, with the last house that my wife and I sold, it was a situation like that. I believe it was a FHA loan, and we were able to get the price we wanted for the house. We didn't have to come off the price, but we took care of the closing costs for the buyer. So that's kind of what you're mentioning there, right?
That's right. That can be play into it and help someone get in with less down or nothing down.
Chris, let's talk a little bit about Dave's question, and that is money. You mentioned zero. Now, as a realtor, I would tell our listeners that there's this thing called earnest money. And if you've never heard what earnest money is, that's the you can trust me, I'm not going to back out money. It's what we call good faith money. And we're choosing a closing date that, let's say, is 45 days down the road. And I'm going to go try to get my loan, and I've got to pay for this credit report and appraisal. But it's just saying, I'm not going to back out, and if I do, I lose my earnest money. So for our listeners, earnest money is typically held by the title company or the real estate firm, and it goes into an account, and that check is cashed. But it's not extra money that the seller gets. It's good faith money that says if you close on the home exactly as you've said you would do in the purchase contract, this money will be credited toward your down payment and or your closing costs. Normally for our listeners, Chris, it's kind of become a standard in our industry to see somewhere in the neighborhood of about $1,000 that most sellers want, or maybe as much as about 1% of the purchase price. So, Chris, besides the earnest money, you and I know there are a few other things that have to be paid up front. For instance, like a credit report. Can you comment on that?
Yeah, great question. So some lenders do require a credit report fee up front. It's not something that we do. For us, the only fee that is paid up front, meaning when this is ordered, is the appraisal. And the appraisal varies depending on the property, but in general is around $550 and is paid once under contract and once we've disclosed the initial paperwork.
Okay, so we've got some earnest money, which I talked about. We got appraisal and credit report, and typically Gateway, you said, takes care of the cost of the credit report. So the last item I would tell our listeners is you've written a contract, and we'll just kind of go through some timetables here. First of all, I'd say shop for a bit. Become a knowledgeable buyer. Even if you're just shopping online at realtor.com or Zillow or going to an MLS site, search, look at about what you should have to spend to get a certain amount of square footage for a home in the area you want, and it's about the age that you want. Isn't that what you did last time around, Dave?
Exactly.
So, so you can do some shopping there. Begin to talk to somebody who's an expert in the field. I would love it if that's us, so that our team can help you out if you're going to be buying a home. That's what we love doing, is helping first-time buyers, because with great service, they continue to come back to us over time as their needs change for their family, financial needs, moving out of state, whatever it is. So once you're looking at homes, Chris, you and I know that getting pre-approved is like buying the seller's confidence.
That's right.
The seller, when you take them an offer, if I'm the realtor and I go sit down with the seller, the first thing that they're going to say is, hey, is this buyer pre-approved? So talk to us about the difference between pre-qualification, Chris, and actually getting pre-approved with Gateway.
So pre-qualification versus pre-approval, and it really does vary lender to lender, and which is why there are some sellers that will balk depending on who the letter is coming from. From a pre-qualification perspective with my team, we will get the application, we'll pull credit and get documentation to verify with the information that the borrower has given us so that we feel confident when they go out on the street and we've said they're qualified that they can go get this scenario that we've discussed. A pre-approval is one step more where that file has been taken to an underwriter and the underwriter has signed off on those verifications. What I will just say is there's a lot of lenders out there, when they give a pre-qualification letter, they've gotten the information, but they've never verified physically the data that's been put into the system.
Yeah, that's right.
And that's why some of those letters don't mean very much.
And this is something I think our listeners really need to hear. The Fed's rate is the same for every member bank across our entire United States. The Fed's rate is not one rate in Oklahoma, a different rate in California, and a different rate in Wisconsin.
Correct.
I think there is belief that if you look hard enough, you can just find a cheaper mortgage rate. But if the money costs the same for the overnight rate from the Fed, Chris, tell our listeners about why money pretty much costs everybody the same thing, and there will be some difference in interest rates, but your company always seems to be as competitive as anyone I can find.
Yeah, absolutely. I think we're super competitive that way. And I will say there are times when I get questions from borrowers of, hey, I can go to this .com in Ohio and I can get an eighth or a quarter of a point better.
And Chris, do some of those places that advertise those low rates, do they also have like maybe some hidden fees or something that you may not know about, and it's going to cost you more in the long run?
That's always a fun phone call of like, hey, I've been on this website and they say rates are this. And I said, well, that's awesome. Totally agree. I can actually get you the same rate. However, it costs this amount in buy down or this amount in upfront fees. Have you dug in with them to see if that's the case as well? And the answer is 99.9% of the time, no. And so those beautiful rates that you see online normally come with a broken down engine, so to speak.
So here's what I tell borrowers is someone will tell me the same thing. And when I say if you're shopping for rates, ask what their rates are and what their fees are to get that rate.
Yes.
And that's the big one. So once you've got someone pre-approved, we can take and put them into a car and literally with your processing team, because I know you run your office like we do ours. Everybody has a very specific task. You're not a one-man show. You have underwriters, you have processors, you have people that are calling customers back in customer service. You have loan officers like you. And so timetable for purchasing, you and I know it's actually possible to go get a loan closed, even though it's a challenge to do that. Someone could actually get a loan and get one closed in 12 to 15 to 20 days if they absolutely had to move, if they had everything submitted to you, their documentation. Is that right?
Absolutely. Regulatory-wise, we can't close anyone. It has to be 8 days or more from when they get their loan estimate, and we've closed some in 8 days.
Now, that's really fast.
That's really
for our listeners.
That's really fast and not normal.
Yeah.
So that's an appraisal was already done on the property. They transferred the appraisal to us. I mean, there's some other circumstances. But in general, if that hasn't been done, Wally, I always say when someone asks me how fast you can close, I would put us up against anyone in the market that closes faster than anyone. But I always ask how motivated are the parties? Because if the borrower isn't motivated to get us everything we need immediately, then that can slow stuff down. But, we can absolutely move fast. 12, 15, 20 days is not out of the ballpark. And we've done 20 a lot in the last 6 months or more. So we're built to do that and have the ability to help people close.
Chris, most of our buyers will want to know that 30 to 45 days is pretty normal. It allows the title work to be done, the financing to be done, to get the inspections done, and then to do a final walkthrough. So that's really a very, very comfortable time. And so I would say that buyers, if they want to look around, if you want to buy a home, you may be looking too early if you don't want to buy for 4 months, because there's a really good chance the homes you look at and could fall in love with won't be available when you're ready to buy.
True.
But we normally recommend 60 to 75 days out from when you want to buy a home to start looking at properties. You don't need a whole lot of money, and then locking a rate just means I believe that the rate is as good as I need it to be today, and I'm going to talk to my loan officer like Chris and say, hey, Chris, do you think rates are going to come down, and should I float or should I lock my rate in? Isn't that correct?
That's absolutely right, and once they're under contract, they can do so. There is a program out there that allows them to lock before contract, but I typically think the best situation is once they're under contract, then we look at locking if they're within 60 days of closing. And we absolutely will see what's going on in the market and see if it's an advantageous time to do so.
Chris, you've become, pretty much our go-to lender because of expertise and knowledge and experience. And let's face it, you've got a team just like we do. Everybody's got their own role, and they do a great job at it.
No, I think that's great. And I would agree with you. We found in 2020, 2021, and even into 2022, when inventory became so tight and you had multiple offers, one of the things that we even talked about it with your team this week is that one of the things that we want to do is we want to help your buyer win the deal.
Yeah, and that
so
helps a
we wanna-
lot to have you on the phone, talk to the
That's
other
right.
agent. Maybe they get the seller on the phone, and for you to say, wow,
Yep.
Dave here is a great borrower with great
Yep.
credit, great job history, and a great income, and I'm confident we've already run him through underwriting, so I could just give you the green light here that unless something disastrous were to happen, Dave is going to be able to close on this property. And so with buyers,
That's great.
it's helping with financing. We help them understand the contract, help them with inspections and negotiating repairs, help with final walkthroughs and closings, and we oversee that entire process. So there are some other elements here that we didn't talk about today, but that's where our experience as a real estate team will help anybody who's a first-time buyer, whether you're 17 years old or 97 years old. I'll have to share the story sometime, Chris, about the couple that bought a home, and he was 91 and she was 74, and they got a 30-year mortgage.
Okay.
So we'll leave it at that for a funny
That's
note
right.
today. Dave, close us out on this segment, if you would. I've really enjoyed having Chris on today, and I think we've had a lot of good information here in our series.
Yes, and if anyone has questions and they're ready to move ahead and want to give Chris a call, Chris, what's your phone number where people can reach you very easily?
Thanks, Dave. 405-253-2276, 405-253-2276.
Now, we covered this topic, how to prepare to purchase your first home, for 3 weeks now. So if you want to hear the first week, the second week, and you want to hear a replay of this week, and maybe you want to share it with your kids or grandkids that are getting ready to purchase their first home, you can go to wallytalkshouses.com, listen to those shows, get them all the information. If you want additional information, just shoot Wally a text, 330-3000, and you basically say, hey, Wally, I want some more info on my first home purchase, and you'll get a text back, and you guys can just chat on text, or you can shoot Wally a quick call, and you guys can talk about it. But great information these last couple of weeks. And Chris, thank you so much for joining us.
Absolutely. Thanks so much for having me.
To schedule an appointment with Wally Kerr to help you or a family member buy or sell a home, call or text at 405-330-3000 or go to wallysguarantee.com. Wally will be right back with more of the Your Home Sold Guaranteed radio show right here on KOKC.
Hey, home buyers, let's talk turkey for a minute. Would you choose a healthy economy or lower interest rates? As of January 5th, the U.S. jobs report says we're in a healthy economy with a larger increase in jobs in the U.S. That leads us to believe the Fed will wait even longer until it begins to reduce its rate. Meantime, the demand for homes always picks up in the spring, with many buyers chasing the same home, and that means more competition for you. With home prices on the rise, doesn't it make sense to get in the market now? A $300,000 home that increases just 2% over the next year will increase $6,000 in value. I'm Wally Kerr, and my team and I offer rock-solid advice about buying a home in a market like this one, where home prices are going up and fewer homes are for sale. Call Kerr Team today at 330-3000 and tell us you're ready to get started with the process. I promise you'll have a great experience working with my team. Call us today at 330-3000.
Best Protect Roofing and Construction has been serving the Oklahoma community since 2017 with trusted professionals and a proven track record. Best Protect Roofing and Construction has the local knowledge to ensure every roofing project is compliant and hassle-free. They offer free roof inspections to assess damage, provide accurate quotes, and recommend the best solution for your home. Call today, 405-473-9599. Best Protect Roofing and Construction.
Finding the right mortgage can be stressful, from knowing which program fits your situation the best to identifying the best terms. Hi, I'm Chris Doak with Gateway Mortgage. I work closely with you every step of the way, from pre-qualification to helping you choose the home loan that's right for you. My promise is to provide transparency, timely communication, personal service, and closings on time. Call me today at 405-253-2276. That's 405-253-2276.
NMLS 984758, Gateway Mortgage, a division of Gateway First Bank. NMLS 7233, Equal Housing Lender.
If you or a family member will be selling or buying a home and would like to schedule an appointment with Wally, call 405-330-3000 or go to wallysguarantee.com. Now back to the Your Home Sold Guaranteed radio show with Wally Kerr.
You've been listening to the best of Your Home Sold Guaranteed radio show. I'm your host, Dave McKay. Wally and Cindy Kerr will join us again next weekend. To listen to past shows, Go to wallytalkshouses.com. They have all the topics to choose from. You can listen to just little segments, entire shows. You can listen to the show on all the major podcast networks. And don't forget, if you are listening at the very end Saturday, we replay the show Sundays at noon right here on KOKC. We'll see you next week, and thanks for joining us.
You've been listening to the Your Home Sold Guaranteed radio show with Wally Kerr. Heard every Saturday morning at 11 a.m. and replayed on Sundays at noon here on 1520 a.m. and 95.3 FM KOKC. Wally's name is his promise. Your Home Sold Guaranteed Realty. To speak with Wally directly about selling your home or buying, call or text him to schedule an appointment at 405-330-3000, 405-330-3000, or go to wallysguarantee.com. That's wallysguarantee.com.